Hi there. Welcome to IA Global Asset Management's quarterly podcast, where our portfolio managers and asset class experts discuss current market events, trends, portfolio allocation, and outlook. I'm Rose Marcello. I'm a client portfolio manager at IGAM, and my guest today is Marc Gagnon, portfolio manager, North American Equities. Marc is an award-winning portfolio manager with a long track record in Canadian equity, real estate income, and small cap strategies. Good morning, Marc.
Hello, Rose. I would like to wish you a happy new year.
Thank you, Mark, and Happy New Year to everybody listening to us today. Today, I'd like to discuss with you, yes, market trends for Canadian equities in 2024, but also what are your top risks and opportunities for the next 2 quarters. Maybe what I'll start with is that we've had a nice rally in Q4 of 2023. What's your take on that, and what do you anticipate? How do you anticipate 2024 will play out going forward?
I think I'm mostly positive for 2024. It's true that the last couple of weeks of 2023 were very good for the stock market, both Canadian and US. And maybe it's possible that we have a slow start the first couple of weeks of 2024, especially when I look what are the expectations in terms of rate cuts from the market regarding the Fed. And it's possible that it takes a little longer. We were, before the employment number this morning, we were looking at a rate cut in March in the US by the Fed. It might take a little longer. I personally think that it might go as far as the summer. But I don't see that as a huge problem because I think that ultimately it will be positive for the market to see both central banks in Canada and the US to cut rates. That will help valuation, mostly with the multiple side of the equation. So I think the risk is at this point more a risk of a question of timing than if it happens. So the risk once again is maybe not being in the market when it will take off. And we all know that the first days of the market rally are the most powerful. And I think that 2003 was a good reminder of that fact. So, yeah, overall, positive on both the Canadian and the US stock market. Maybe a little more on the Canadian one. Why? Because multiple are much lower than the US. We're talking about 4 to 5 times turns lower than the US market, which is quite, in terms of on an historical basis, that's quite a spread. So, yes, positive, mostly positive.
Good to hear. So you're very positive on the Canadian equity market. Any particular stocks or sectors that you're watching closely?
I think it's going to be a good year for all sectors, honestly. But I guess the question is then more a question of opportunity cost. Which sector do you want to favor to, benefit the most from that rally? And that's probably where I'm looking at is the cyclicals ones. We're talking about industrials, base metals. I think that financial will do well also, and technology should be able, once again, to do okay this year. Another one that would be interesting is probably the energy, but this one is a little more tied to sometimes the weather, sometimes geopolitical events. So it's a little more risky to invest in that one or to be overweight in that one. But that's certainly one that, in theory, if the economy picks up eventually toward the end of the year, or we see that happening in 2025, it should do well. So that's the sectors I would like to prefer. So I think the one that we might be less interested with, and maybe not at the beginning of the year, are the defensive one. I'm thinking about the utilities. I'm thinking about telecom, consumer staples. So that movement from the defensive to the more cyclical will happen. We have started, to be honest, to do it, but we'll continue toward the first weeks of the years. So it's something that will be gradual, and at the end of the year, I suspect that the cyclical sectors will outperform the defensive one.
Great. And you spoke about, so your main focus will be cyclicals. That's where you see a lot of opportunities. We also spoke about rate cuts earlier. I'd like to bring the conversation to the real estate market in Canada. It has been under pressure for the past 2 years because of interest rates. What's your overview of the landscape across subsectors for that market?
Yeah, the real estate sector will be another one that should perform well in 2024. And we've seen it in the last couple of weeks of 2023 when the long term, the 10 years in Canada went down by about 1%, which was quite a move that was quite rapid and a bit surprising. But the real estate market sector was one of the most best performing one on the TSX. So there were a lot of value in that sector, and I think that it will continue to perform well with the rates continue to go down with the expected cuts by the Bank of Canada. So we will favor some subsector, though. We think that have more potential. We are quite interested by the apartment sector, the REITs apartment sector. Why? Because there's a lot of immigration that will continue in 2024, and we see that benefiting to the rate increase and translate by better rate increase actually. So it's a sector that is not expensive, hasn't rallied that much, and we think that it will clearly show that it's a sector that will do well in 2024, especially that we think that one thing that was negative for that sector in 2023 was the higher cost of interest. Most of them right now have fixed their long-term, their variable interest costs. They are now fixed. They took the opportunity to fix them during 2023. So we won't see the interest costs rising anymore. So that will help the sector. Another subsector that we think that we will do well is the industrial. That has been a clear winner in the past 2 years. Will continue to do well, maybe not as much as in the past, but will be quite an interesting sector. And the last one that we think that is a bit under the radar right now is the retail REIT sector. I think that the fundamentals are better than what the market thinks. And maybe the market is a bit afraid with the consumer slowdown in expense that will translate with some difficulties, potential difficulties with the sector. But we think that at one point in 2024, with rate cuts coming, people will have a better view on the economy, especially looking toward 2025, and therefore the sector should be interesting for a rebound. So these are the subsectors that we think that will do well in 2024.
Thank you, Mark. Maybe, I'll conclude on, given your extensive expertise and your experience, we're starting a new year. Given the current economic climate, what advice do you have for investors?
I think that in 2000, there will be, in the headlines, in the article where you will read some negative, momentum or sentiments, because we're at the beginning of a recession. So you're going to see probably, some layoff out there, some companies announcing that their profit won't grow as much as expected. But I would say that don't forget one thing. Don't forget that the market is looking ahead, is always looking ahead in average between 6 and 9 months. So we're already, thinking about the rate cuts that both the Fed and the Bank of Canada will do in 2024. As soon as those rate cuts will begin to look more certain, the market will think at the next phase. What will be that phase? It will be an economic recovery in 2025, probably. So the market will already start to anticipate that economic recovery coming from those rate cuts. And therefore, even though profit won't look maybe that great, especially in the first part of the year, people will bid up the prices of the stock, because they will say, okay, profits might not be great, but I think that, they will be better in 1 year from now. So you will see what is the multiple increase, a multiple increase, which is the other part, of where you can see price appreciation on the stock market. And that's where the Canadian stock market start to look very interesting because multiple are much cheaper than the US. We're talking about 4 to 5 times, which is quite high when we look on an historical basis. So that spread is really favor Canada for now. And we think that's why we think that we should see a very interesting return from the Canadian market and even a better one than the US one.
Great. So the usual advice of stay invested, be disciplined, be diversified remains in that current environment.
Exactly. I think it's a recipe that is certainly valid most of the time, and especially in 2024.
Great. Thank you so much, Mark, for being here today.
It was my pleasure. I would like to wish everyone an excellent year in terms of investment and also on the human side.
Thank you. Have a great day.
Bye-bye.